Barton, it's good to have you back.
Thank you.
I've seen some notes on the street today that some investors likely feel burned given the guidance from just a few weeks ago. What do you think happened?
I think that I think the world is changing. And this is what happens when the macro changes is, people are surprised. And, I think Snap was kind of a leading indicator of the beginning of some of the weakness in internet advertising in the first quarter earnings season. And I think they're also, ahead of the curve here in the second quarter and saying that things are getting a little bit weaker.
Right. Now, initially, that caution that they were feeling was largely a dynamic out of Ukraine, right? What do we think drove this? I mean, I've seen some estimates that maybe revenue growth for the last piece of the quarter might have been 15 or even less, some estimate.
Right. I mean, I'm modeling that they'll be growing in the teens here in the second quarter when the numbers come in. And, I don't think it really improves much from there in the near term. I think that the macro is what they're calling out. Last quarter, they talked about Ukraine. This quarter, the emphasis seems to be on inflation, on interest rates. I think we look and remember the warnings from Walmart, from Target. Not that those are necessarily the advertisers are driving what's happening here at Snap, but I think they're emblematic of a toughening environment that I think Snap is beginning to feel.
But, some would wonder, Barton, like, wow, macroeconomic headwinds like this translated so quickly into a reduction in advertising. I mean, are you surprised at the rapidity, again, back to Carl's question, kind of what we're seeing here, how quickly perhaps some of these budgets have changed in terms of the willingness of advertisers to spend on the platform?
Well, I think everything in this day and age is surprising. I mean, we live in a world that's surprising. And I think that what's happened is that a lot of people are feeling the environment shift really quickly underneath their feet. We're hearing it in the data. You guys talked about the housing market. We've seen it with the retailers. People are their heads are, people are going through a collective whiplash. And I think Snap is right at the very tip of that whiplash today.
All right, but we're looking at some other names as well that are far larger businesses, certainly Meta and Alphabet.
Yeah.
Any worries there in terms of actual weakness in their underlying business?
Look, I think we're in an environment where you have to assume that everyone's going to feel what's going on. And I think in this environment, what you have to do is those equities that you own, you have to think about a longer term perspective. Is this something that I'm willing to own through a slower environment to look through, the improvement on the other side? In my book, Snap is one of those because of its strength with the youth audience and its strength in technology and its relative strength and audience. Alphabet, in my mind, is another. But across the broad internet ad landscape and the ad landscape generally, I've got many more neutrals and sells than I have stocks that I'd put money into today into this environment.